With the end of the financial year coming up, it's important to know which tax deductions you can actually claim. So in this video, I'm going to share with you 11 tax deductions you might not know about. But before we get started, remember that I am not a tax advisor. This is not tax advice. This video is for informational purposes only. You should consult a registered tax advisor or the Australian Tax Office to see if these tax deductions are applicable to you. Yes, I did have a lot of coffee before filming this video. Also, it's very important to make sure you hit the like button and subscribe if you haven't already. The first tax deduction to talk about is home office expenses. Now, because of the pandemic, actually a lot of people were working from home, so you should be somewhat aware of this tax deduction. According to the Australian Tax Office website, home office expenses include things like electricity expenses that are associated with the heating, cooling and lighting of your home office, cleaning costs for your home office, computer consumables, for example, printer paper or ink, and stationery, home office equipment such as computers, printers, phones, furniture and furnishing, as well as internet and phone expenses. Like I mentioned earlier, a lot of people actually had to work from home for the very first time because of the pandemic. And in response, the ATO actually introduced a shortcut method in order to claim your deductions for your home office expenses. Using the shortcut method, you can claim 80 cents per hour for each hour you work from home. Now, it's important to note that this shortcut method is only temporary and can only be used to work out your deductions from the 1st of March 2020 to 30th of June 2020 in the 2019 to 2020 income year and for the 2020 to 2021 income year. The shortcut method actually covers all of your working from home expenses, which means if you use this method, you can't claim any other expenses that you normally would for your home office. Apart from the shortcut method, there's also the fixed cost method, which lets you claim 52 cents for each hour you work from home. This method doesn't include phone expenses, internet expenses, computer consumables, and stationery, which means you can actually add that in if you use the fixed rate method. And lastly, there is the actual cost method. As its name applies, you have to work out the actual cost of each expense. Head to the ATO website for more details. They actually have quite a few scenarios that help you figure out what your own personal situation would be. The second tax deduction you might not know about is a handbag or a briefcase or a satchel. Now, like most tax deductions, there are conditions that apply to it. So you most likely won't be able to make a deduction if you go and buy a new Hermes Birkin bag. The ATO website says you might be able to claim a tax deduction for a handbag, a briefcase or a satchel if you use it to carry items that you need for work. So example, a laptop, a tablet, work papers or a diary. The amount that you can actually claim as a tax deduction will depend on how much you use the bag for work purposes. Unfortunately, you won't be able to claim a deduction if you mainly use the bag for personal purposes, which the ATO gives examples like carrying your lunch or beauty products. Also, when you use the bag for both work and personal purposes, you have to figure out the percentage of the two and adjust your deduction accordingly. If you're claiming a bag that's worth less than $300, good news, you can claim it immediately. But if the bag is worth more than $300, you will need to depreciate it over time. Now, before you get excited and claim all of your phone and internet bills, this deduction is obviously only for work-related purposes. Which means if you use your phone or internet for both work and personal purposes, you'll have to figure out the percentage that is for work. According to the ATO, in order to work out your mobile phone tax deduction, what you need to do is pick a typical 4-week period in the tax year and calculate how much of your phone usage was work-related and how much was personal. One important thing to note is that you cannot double dip and claim for mobile phone expenses if you've already been reimbursed by your employer. The ATO has a couple of different ways you can calculate this percentage for your phone or internet bill. The first one is you can use the number of work calls made as a percentage of total calls. For example, if you made 40 calls in a typical 4-week period and 20 of those calls were for work, then you could probably claim a 50% deduction on your mobile plan. You can also calculate the amount of time spent on work calls as a percentage of your total calls, or use the amount of data downloaded for work purposes as a percentage of your total downloads. So generally speaking, you can't claim expenses for getting to and from your normal workplace. But if you have to travel for work, then you might be able to claim those expenses. On a related note, you can use this method for your internet bill if you use it for work-related purposes. Make sure again to check out the ATO website because they have a few different scenarios to help you understand your own situation. So according to the ATO, transport expenses includes the costs of driving your car or your van or your ute or your motorcycle. It also includes ride sharing and ride sourcing, so think of Uber. It also includes flights as well as catching a train, taxi, boat, bus or other vehicle. Travel expenses are defined as expenses that you will incur when you travel and stay away from home overnight in order to perform your normal work duties. So they include things like your cost of your accommodation, so staying at a hotel, your meals, including food and drink, as well as any incidental or additional expenses that you might occur during your travel. It's important to note for both transport and travel expenses, you will need to keep a travel diary which details your movements while you're traveling for work. And once again, don't try to double dip. If your employer has already reimbursed you for your travel or transport expenses, you can't actually go and claim that as well. Most people watching this video have at some point in the last year bought face masks, hand sanitizer, and antibacterial spray. Well, did you know that the ATO says that you might be able to claim those expenses depending on what you do for work? For face masks, the ATO has 3 conditions that you need to meet in order to claim this deduction. The first one is that your employment duties require you and other employees to be at your place of work. Number 2, a face mask is not provided to you by your employer. And number 3, you need to wear a face mask. For other PPE items like hand sanitizer or antibacterial spray, your work duties must either A, bring you in close contact with clients or customers, or B, involve you cleaning the premises. The ATO lists the following industries that these claims would usually apply to. So first off, you have the medical industry, you have cleaning, you have airline, hairdressing and beautician, and as well as retail, cafe and restaurants. Once again, the ATO has a couple of different scenarios to read so that you can kind of understand a bit better when it comes to claiming PPE. If you have a work uniform or occupation-specific clothes, you might be able to make a tax deduction on them. You can also claim a tax deduction on protective clothing if it protects you from specific illness or injury that you might get during your work duties. Some examples include safety vests, non-slip nurses' shoes, protective boots, and gloves. The ATO also says that you can claim a deduction for the costs you incur to wash, iron, and dry your work clothes. So you can claim a deduction for gifts or donations that are made to organizations which have a deductible gift recipient status. So most charities and non-profits will have this GDR status, but if you wanted to check, the Australian Business Registry actually has a handy tool that lets you look up if an organization has the GDR status. I'll leave a link down below. So generally speaking, you can claim any amount that is above $2, but you can't make a claim on gifts or donations if they provide you with a personal benefit. So things like raffle tickets or a fundraising dinner won't be able to claim. So you can claim a deduction for expenses you incur when you're managing your own tax affairs. Some examples include buying tax reference material, signing up for a tax return preparation course, buying software that allows you to prepare and lodge your tax return, obtaining tax advice from a recognized tax advisor, as well as any travel costs you incur in order to obtain that tax advice from said recognized tax advisor. So if you take a train from your home to your tax agent's office in order to have a meeting, then you could potentially claim that as a tax deduction. Another tax deduction that you might not know about is books and journals. No, you can't go and claim your copy of 50 Shades of Grey. This deduction is specifically for books, journals, and digital information that you use as part of earning your employment income. In this context, digital information includes things like online subscriptions or ebooks, provided you use it for work-related purposes. Self-education expenses can be deducted if there is a direct connection between your education and your work activities. So let's say you're working as a nurse and you decide to take a course on software engineering. Generally speaking, you won't be able to make a tax deduction on it because it's not directly related to your work as a nurse. Some of the self-education expenses that the ATO lists include things like courses taken at an educational institution, attendance at a workshop or a seminar, work-related conferences, as well as self-paced or distance learning. One thing to note, there's actually quite a few terms and conditions when it comes to self-education expenses, so make sure you check the ATO website or talk to a registered tax advisor. And the last tax deduction you might not know about is personal super contributions. That's right, you may be able to claim a tax deduction for after-tax super contributions you make. An important thing to note is that the contribution that you claim as a tax deduction will actually count towards your concessional contributions cap. And if you go over this cap, you will have to pay extra tax. Also, any excess concessional contributions will then count towards your non-concessional contributions cap. I know this might be a bit confusing, so make sure you check out my beginner's guide to superannuation video. I'll leave a link in the description box down below, as well as at the end of the video. I also have a separate video about salary sacrificing into superannuation, so make sure you check out that as well. As always, thank you for watching, liking, and subscribing. Let me know in the comments down below if you have any tax deductions that people might not know about. As always, an important disclaimer, I am not a financial advisor, this is not financial advice. This video and my channel is for general information only. As with anything in life, you should do your own due diligence and seek independent advice.